Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's move on to another tech story. It is on the Bloomberg Big Take today, and the title is The Apple Insiders in the Running to Succeed Tim Cook. Only one person you can talk to about anything to do with technology and Apple, and that's Mark Gurman, Bloomberg chief correspondent on Bloomberg Technology, joining us. It was so interesting when I read this because I don't think I have heard of anyone talking about succession with Tim Cook, but he's been around for a very long time.
Thanks for having me. That's right. Cook has been around for over 2 decades at Apple now. He was named CEO in 2011, obviously taking over for Steve Jobs. He's turning 65 next year. He's one of the older CEOs in the S&P 500. They have a management team that's essentially been the same cast of characters for a decade plus. And they're in a precarious position right now, battling smartphone slowdowns, battling a shift of manufacturing out of China while trying to keep China still happy, regulatory concerns in both the US and the European Union. So there's a lot going on, but Tim Cook's getting up there, and it's time to start thinking about who comes after Cook. And so my story this week takes a look at some of the options, and I'll just give you the quick summary here. If he were to step down in the near term, he'd likely be replaced by Jeff Williams. He's the chief operating officer. If he stays around about 5 years, as many expect, including me, he'd likely be replaced by John Turnus. He's the company's senior VP of hardware engineering, and he's been playing an increasingly important role in product development and other aspects of the company.
So, Mark, this was a great point that you made in the story. So Tim Cook, he's 63, older than a lot of his peers in the average Fortune 500 C-suite company. But it's interesting because there was a quote from somebody, saying, if Biden, Trump could be president at 80 years old, like who's to say that Tim Cook can't stay on as CEO, or that, someone else of one of his peers who's maybe also in that same kind of age range also couldn't be suitable for it.
Yeah, he certainly, could stick around, right? I mean, if you can run the country at that age, you can run Apple at that age. But I don't think that's what Apple's board of directors or Tim Cook would want, to be honest.
Why not?
Well, I think there's a culture of passing the baton, right, in these corporations. And Tim Cook is going to want to give someone else a chance, right? It's a technology company. And, many people want someone who, grew up in Silicon Valley, someone who is newer and more innovative to take over these tech companies. So I just don't think Tim Cook at 80 years old would want to run Apple or should run Apple.
It doesn't sound like Tim Cook has talked a whole lot about this. You mentioned I thought this was kind of weird that of all places where Tim Cook has shared the most about, his life after Apple has been on a podcast with Dua Lipa. Didn't see that coming. I don't know. Is she like
definitely did not see that coming.
Like, is this like the place to go if you're going to drop some secession news?
Well, Tim Cook doesn't do many interviews, right? He does a few a year. And, to be fair, Dua Lipa probably asked the best questions of any interview that I've seen Tim Cook participate in a while. And she brought up the succession question. Obviously, that was a little surprising that she brought that up because it doesn't seem central to, her line of questions that the rest of the podcast had. But she asked, and Tim Cook gave his most in-depth comments on the subject to date.
You mentioned a hardware engineering person that may be taking over if it's longer than 5 years. Why not like an AI-ish person?
Well, it's not necessarily because John Turnus is a hardware engineering person that he's going to be taking over the company. It's mostly because he's in the right age range. He's so important to the company. He has excellent managerial skills. He's extremely well respected inside the company and within the industry. So he has a lot of things going for him other than obviously very important being the hardware engineering person. In terms of not an AI person, well, Apple's AI person, John Giannandrea, quite frankly, I don't expect him to remain at Apple for many more years. And I certainly don't think that he's primed to run the whole company. He joined Apple in 2019. For all intents and purposes, he's an outsider. When you're at Apple, you really want to gain steam there, especially if you're going to be the next CEO. You really got to be there for 2 decades. It's a cult, right? You're not going to see someone be able to be CEO who comes in from the outside. And their head of AI, for all intents and purposes, like I said, is an outsider.
So when Steve Jobs was, toward the end of his tenure, obviously he was battling cancer at the time. What kind of circumstances, barring, a health crisis, which of course we hope that wouldn't happen, but what kind of circumstances do you think would be fitting for Cook to step down under?
Well, Cook is going to run Apple as long as he wants to run Apple, right? Like I said, I don't think that's going to be until 80, but I wouldn't be surprised if he remains at Apple until 70, right? And the circumstances would be when he feels it's time to pass the baton. No one is going to force him out. There's no retirement age. There's no requirement. So it's going to be as long as he wants to run the company. And so there's no circumstance that I think would push him out the door.
It also feels like managing Apple is also about managing geopolitical relationships with China. Like, how do you think that kind of overlays? Or am I making too much of a big deal about it and it's actually a cyclical thing and I should chill out?
Well, no, I think that's extremely central to the CEO role, right? And the thing that's going to test Turnus the most is how do you operate on the world stage? Now, there's something else to really understand here. The CEO of Google, Sundar Pichai, the CEO of Microsoft, Satya Nadella, they are both engineers who took on the CEO role, just like I expect Turnus to eventually, right? But both of those people have an executive there that manage the relations for them, right? Microsoft famously has a president whose name is Brad Smith. He handles all the international relations, right? Sundar Pichai, they made their CFO, Ruth Porat, right? She now manages these international relations and these issues. So the CEO doesn't necessarily have to be the person who manages these relationships. The reason Tim Cook does it at Apple is not because he's the CEO, that's because he's the best at it, right? And different CEOs are going to have different skill sets. And being the CEO doesn't mean you have to do everything. It means you have to do a mix of things, but have the ability to appoint the right person and put the right people in position to do the things that you're not good at.
Last one for you here, Mark, 30 seconds. Tim Cook's talking about maybe life after Apple being something more philanthropic. Any ideas on what that might be like?
Well, obviously, he generated a lot of money while being CEO of Apple. My belief he's going to open up some sort of charitable foundation and make donations to, various places. I would say the best comp to this would be something like what Mackenzie Scott has been doing, or Lorraine Powell Jobs. Both have opened foundations over the past, several years, and make philanthropic donations on a pretty targeted basis to specific entities constantly. And so I would expect Cook to do the same.
Really appreciate it, Mark. I know it's early where you are, but we appreciate you getting up for us. Mark Gurman, Bloomberg Chief Correspondent on Global Technology. And you can read this great story on Bloomberg and also at Bloomberg.com/Big Take. Don't miss it.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We also have a really interesting move here with HubSpot and Alphabet. Do I know those things? I don't really know those things.
No, but Mandeep Singh thankfully does.
And so does Niraj Patel. So Mandeep Singh is senior technology analyst for Bloomberg Intelligence. Niraj Patel is Bloomberg Intelligence senior software analyst. Luckily, they can have us covered on all of this. Niraj, what is HubSpot and what does Google/Alphabet want with it?
Yeah, hi, Alix. And HubSpot, they are playing directly into sales and marketing software. Small player, well below the scale of Salesforce and Adobe. They have about $2.5 billion in revenue relative to a $40 billion Salesforce scale. So much smaller. They target SMBs. Their average customer is about 50 to 100 employees. So they offer this type of platform, which is about 210,000 total customers, to Google to maybe enhance some advertisement and leverage CRM as a gateway for AI into software for Google.
This is a pretty big, potentially, acquisition. So I want to bring in Mandeep Singh here, who's with us in the studio today. Hey, Mandeep.
All right.
So this would be a company right now that's valued, HubSpot that is, around $30 billion. So much talk of antitrust going on in the tech space. Is this something like Google could really pull off?
I mean, they could, in theory, simply because Microsoft recently bought Activision, and that was close to $70 billion. So, any acquisition here would not be north of 40 billion. So from that perspective, given Google is not a player in application software, I think the antitrust argument is pretty weak in terms of, preventing them from acquiring HubSpot. And in terms of why they are looking to buy an asset like this, look, Google's primary business remains ads. They are big on the foundational model side with generative AI. They have the cloud infrastructure. So getting a CRM play for training your models is something that is quite forward-looking. I don't think the market fully grasps what they're trying to do here. But it does make sense because in the end, if you have to deploy generative AI at the enterprise level, you need data. And who better than a CRM company that has got data related to, an enterprise system, sales system. So it does make sense that they are trying to apply that kind of AI in the context of an enterprise.
Right. Well, to your point of, maybe investors not quite grasping it yet, Google shares more or less unchanged on the day, actually slightly down, but you think this could be maybe a more positive, longer term story for the stock?
I mean, these companies don't make acquisitions for inorganic growth. It isn't about the revenue contribution from HubSpot. It is more about how can they position themselves better at the enterprise level. And in the case of Alphabet, look, they've never had an enterprise business before Google Cloud. So the fact that they have a $35 billion Google Cloud infrastructure business, they can add this CRM asset, and then the generative AI aspect is huge because that's where everyone is expecting all the growth to be.
Niraj, do you like the numbers that we're looking at here? I mean, what do you think it would be worth if Alphabet had to take it over? Wanted to take it over?
Yeah, this is HubSpot's landing at the high end of app software valuation today. It's about 12 times on a forward sale. Some of the comparable peers in SMB space are half of that multiple. So, given Google's balance sheet, they have the appetite to keep pushing the valuation to a higher level. The offset here, not from the numbers, but from a perspective of HubSpot management, this is really their baby. They're going to have a very hard time letting go. You have two active co-founders, and one is still very active in all product development. He's the current CTO. So there'll be a little resistance from the management perspective.
So Niraj, real quick on that, could somebody else come in and make another bid that would make them feel better?
They probably prefer a Google that's not in CRM software versus a Salesforce, Adobe, SAP type of company where they would just be rolled up into an enterprise portfolio.
So if we were to think, Mandeep, of how something like this could hypothetically be financed, obviously cash not a problem for Google. You think this is something they would buy in, just with cash on the balance sheet, or would go to a debt or equity market?
I mean, look, they've been more shareholder friendly recently with the announcement of a dividend. So clearly they are making changes to their capital structure. I wouldn't be surprised if they go to the bond market to finance such a big acquisition.
Even with these rates?
Yeah, but I mean, Google is like AAA, so
everyone would be like happy.
Probably can borrow
sure.
Basically cheaper than the government can.
Yeah, so I don't think financing is an issue, but the regulatory scrutiny is going to come no matter whether they compete in that same space or not, given the size of a potential deal. But I think they can convince the regulators that this deal makes sense for them.
Can we go to Roblox for a second? Because Mandeep, you also covered this. So my knowledge of Roblox is this. My daughter comes in the morning on Saturday and Sunday, takes my phone, and plays Roblox on my phone, Warrior Cats. That's all I know. I don't really know what that means. She's not allowed to talk to anyone online, and she basically makes cats fight each other and get animals and
You know more than me.
stuff. That's all I know. What's going on? But she plays a lot.
And I bet you she's using your credit card to make those Roblox purchases. She is.
Alex's face just sunk.
What are you saying? I think Roblox wants her to do that, but why is the stock down like 23%?
Well, so in this case, I mean, engagement is what drives all these platforms. And the fact that we are going into summer months, it's kind of natural to see some seasonality in terms of engagement coming down. So hours spent were 3% below consensus expectations. Even though the user growth was in line with consensus, 20% user growth. And to my mind, the long-term story is still intact. They have the content to drive, kids of that age, and they have the engagement. There will always be seasonality, and once in a while, the stock will react like this because expectations were higher. But there was nothing on the call that suggested they're losing their engagement to social media. Yeah, mm-hmm. and so I think this is a case of market being in that mood where if it's not a beat and a big raise, your stock is going to get hit, and you're seeing that with Roblox.
Tough crowd. Yeah. This is something that I wanted to come back to. I cover the economy in my regular job here at Bloomberg, and we actually were talking to the lead economist of Visa not too long ago, and they had some great research out about how the gaming economy has really added like so much in terms of consumption just by virtue of so many people being on computers, being exposed to so many more ads and buying more things, not just within the game, but in the broader internet at large. And I don't know, it's not, do you see the connection with that as well in this gaming world and how that's also just boosting aggregate consumption?
I mean, Roblox did call out virtual shopping being a potential driver for 2025. So even though no one talks about metaverse now, the fact that, companies are still talking about virtual storefronts and the fact that you can do shopping on these kind of platforms down the line goes to show that gaming is something that everyone feels contributes to this AI wave, as well as, largely e-commerce connection in terms of, the storefronts and how the behavior could change down the line.
What do they sell in there? What can you buy on that shop?
I mean, that was the whole promise of metaverse, that you can replicate malls in that metaverse. And so if I'm a Walmart that is setting up a grocery or, their shop in that kind of a virtual storefront, I can drive that kind of experience where people feel they are inside the mall when they're sitting in front of a computer, and they can do a lot of the shopping, which again was the promise of metaverse. They were probably 3-4 years too early, and it will take time to build that.
All right, Niraj, I know you're still here. Sorry, we need to get more info on Roblox, basically so I understand what it actually is when my daughter's playing it. What else are you working on right now in your sphere?
I think there's a big dichotomy with the valuations that are occurring in software. You're seeing the SMB companies like a HubSpot, which is a little bit moving against the wave. The rest of the companies are getting hit because small, medium business spending is quite constrained. And you're seeing a significant downward push on valuation multiples for other companies like a Klaviyo, like a Paycom, Paylocity, a whole host of companies in app software.
All right, guys, we really appreciate it. Thank you so much. Can't get any more, can't get better than this. You're at Niraj Patel, Bloomberg Intelligence Senior Software Analyst, joining us, and Mandeep Singh. He is Bloomberg Intelligence Senior Technology Analyst.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Let's get back to Warner Brothers Discovery. That stock is up by about 0.4%. As Nor was talking about, the company reporting sales and profit that fell short of analyst expectations. Shocker, lower TV ad sales, plus poor performance of video games. So no one better to talk to than Geetha Ranganathan, Bloomberg Intelligence Analyst on U.S. media. Why is the stock up on the earnings?
Yeah, it was a little bit of a mixed bag, Alex. So definitely EBITDA under pressure as always, TV advertising, as you just pointed out. But they did have some bright spots, and I think that's why we're seeing a little bit of enthusiasm here. So one thing that they did mention was that, Warner Brothers and Discovery, it's obviously a merger. They've extracted so far about $4 billion in cost savings. They are now projecting an extra $1 billion in synergies. So that I think is something that, the street is definitely hopeful about. And then you have the streaming business. Remember, this is the HBO business that has now been rebranded as Max. And we're seeing some green shoots here. So, subscriber growth had kind of hit a wall. But again, we're seeing some reinvigoration here. So they had about 2 million subscriber adds, and they have a lot more momentum going forward because we're going to see a lot of overseas market launches. But that's not the real story. The real story is that the segment is actually profitable. And that is what has become the new gauge across the whole streaming landscape, whether the streaming business can be profitable. And obviously, Warner Brothers showing us how it's done.
I honestly, I will admit I'm not part of the gaming world, but I was under the impression that this is a pretty strong segment of consumer spending, has a lot of people who are very active in the gaming world. And it seems like for Warner Brothers, at least, this came down to one game in particular. How would you categorize that segment of the business, Geeta?
Yeah, so Warner Brothers, I mean, not necessarily known for, their video games in general, but they did have a huge blowout hit last year with Hogwarts Legacy. That became one of the biggest selling games throughout 2023.
The Harry Potter one.
Harry Potter one, just huge. And so when they were comping this year, obviously they knew coming into this quarter that it was going to be, tough comps. But then they also had their release from this quarter, which was, Suicide Squad, which really did not live up to expectations at all. And then you have obviously that Harry Potter effect, and that just didn't bode well for them for that studio/gaming segment.
The idea, though, right, is that the streaming part is going to wind up doing better, and that will eventually offset slowing TV ad sales, right? Where are they on that sort of balance beam?
Yeah, that's such a great point, Alex. I mean, that's the hope, right? That's what everybody's hoping for, that this transition would eventually pay off. And at some point, like, the streaming service would be better, or at least equal to, if not better than linear TV. But I don't know. I don't think it's actually going to happen, or it's going to take a very, very long time. Obviously, we've seen kind of Netflix set the stage here for everybody else. This year, we're going to see them throw out something like $10 billion in profit. So we know it can be done. I'm just not sure if who can do it, first of all, and if many people can, or many streamers can kind of replicate that success. Because if you kind of look at even the Max business, yes, it's good that they were able to show, throw out kind of $90 million in profits, but you're taking a business that was originally generating something like $2 billion in EBITDA every year. And so, you kind of then take it from 2 billion to, even if it's going to be 200 or 300 million, that's just a fraction of what it was generating. And that's kind of the whole story in media right now, right? You're trading the TV dollars for kind of these digital pennies. And so it does become a game of scale. And that's where kind of this whole bundling concept comes in, because that helps you kind of not only get more subscribers, but it helps you reduce churn, which is really the biggest problem for streaming right now.
Another big story in media is obviously just cutting costs, right? And Warner Brothers has done quite a bit of layoffs in the past year, and we had some additional Bloomberg reporting out this morning saying that CEO David Zaslav is looking to find more opportunities to cut costs, and that more layoffs could be part of that. Is that something, Geeta, that you're worried about?
I mean, yeah, this has kind of, again, been a major thing that Warner Brothers has been very good at, cutting costs. I mean, they did this originally with their first deal, which was the Discovery Scripts deal, where they went in and they eliminated a lot of those extraneous costs. They're really very, very good in terms of implementing, cost savings and synergies. And again, they've kind of, reproduced that same playbook with the Warner Brothers Discovery mergers. The thing with cost cutting is it's very tricky, because yes, you can cut out a lot of extra duplicative costs, especially in kind of streaming businesses when you're combining two streaming platforms, but you don't want to cut too much. You don't want to underinvest in content. And I think what they're going to do here is it's not so much about the content side of things, it's more about marketing and selling expenses. And that's again where, you kind of, yes, they're going to cut that, but that's again where you see how the bundling aspect could really help them, because that helps them save a lot of those marketing and advertising expenses.
Before we let you go, what the whole like Disney Plus, Hulu, and Max together, I have a couple questions. 1, how much is it going to cost? 2, how much should it cost? 3, will they tell me that that's an option, or am I going to weirdly double pay for a while? And 4, I forgot the 4th.
All great questions. All great questions.
Excellent trifecta with an optional plus one.
There was a plus one somewhere. It'll come to me in my brilliance.
So Alex, what we're paying right now, if you want just Hulu and Disney Plus without ads, is around $20 on the nose. And if you're taking the Max product without ads, that's $16. So combined together, that would be $36. Now, again, they haven't said anything on pricing yet. So this is just me speculating, but I would think they would, when they're kind of combining those three together, it would probably be at maybe a $30 or a sub $30 price point to kind of make it really attractive. In terms of will they, will you double pay? I don't think so. I think if you're a Disney Plus, existing Disney Plus or a Hulu subscriber, you'll just have kind of an option when you log in saying, this Max is available to you, and do you kind of want to switch your subscription? That's how I think they're going to do it. And conversely, if you're a Max subscriber, I forgot your third question.
Me too. It was something about how much it would cost. Will they tell me about it?
And are you going to end up double paying?
Double paying. I think you
got
hit
it.
them all. I did remember my fourth one. The fourth one, oh gosh, it went away again.
Oh no. Oh wait, I got a backup one.
Cable.
You go ahead.
Like, is this just about like cable? Is this basically what I did with like Verizon, but now I'm going to do it on my streaming TV?
It's very much the same idea. I mean, we're going back to bundling again. And I think what all of these services are trying to do, Alex and Molly, is they're just trying to now create this super bundle. Remember, Disney and Warner have another sports JV, a sports bundle that's going to come out in conjunction with Fox a little bit later.
Right. So
now they have this Disney Max bundle. I think eventually they're going to be, ask you to maybe have that extra super bundle along with, the sports, the sports option as well. So it's really kind of them trying to keep you on their platforms as much as possible.
And isn't that just the name of the game? We do that here at Bloomberg too, always trying to keep people on the terminal.
Oh yeah.
All day long. So we're guilty of it too.
We understand where that goes. Geetha, thanks a lot. Thanks for playing with us. Geetha Ranganathan, Bloomberg Intelligence senior media analyst, joins us. Okay, so you're getting a couch delivered. I get that. Are you going to sit on the couch and watch like all the streaming things?
I guess I have to decide which ones I'm going to be, signing up for. I mean, I do have the TV already in some of these subscriptions, but I was under the impression, I know I've got Hulu, Netflix. Those are each under $10 a month if you have the version with ads. These ones up here, we're talking like 16 to 20. I don't know.
Well, you saw my face, right? So
that's why I bring it up.
As Geetha's like rolling off the numbers of how much people pay, my mouth keeps dropping, and I'm like, I paid that much for these things? That's the thing, is like you say yes, and then you don't actually know where you're paying, and if you go through, you're like, wait, I'm paying $100 for all this? Why did I cut cable to begin with?
All you need is YouTube, the free YouTube.
I don't do
that. Everything.
No, hello, we know I watch Survivor, so I need that, and then I have a child, and she needs options for when mommy needs to sleep.
She also needs Warrior Cats, which she could
Roblox.
be
racking up my credit card bill.
The card on that too.
The things I am learning.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Here with Molly Smith. Paul Sweeney is out today. This is Bloomberg Intelligence Radio. We cover all the top news for you through our lens of Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. Here's what's so interesting to me, and I mean, this is nothing new, but sort of the two-speed economy that I feel like we keep seeing, in that certain areas of the economy, the lower income, spend more on credit cards, buy now, pay later, NFIB, the small business sentiment, all weaker, but companies, big companies, good earnings beats, profit continues to grow, buybacks happening. Basically, the rich get richer and the poor get poorer.
It's sad, isn't it? Yeah, we see that too in like some of the jobs numbers that are broken out by firm size, and you see that like way more of the hiring is also being done at firms that have at least 500 employees. So
interesting.
Great to be in a building like this, you know, but for much of America, what is it, like half of America works for a small business, right? Isn't it something like that?
And then so even if you have wages keeping pace with inflation, big if, that's still sort of the cloud. That goes a long way to explaining the clouds that we feel, even if we don't see it.
Yeah.
Okay. Clouds for TikTok? Yeah, go ahead.
That's just kind of sad. I hope we talk about something more positive.
I don't know. Today,
as somebody who covers the economy, you know,
I'm
it's
not
just
feeling
like
it.
I'm looking for the happier news.
I don't feel it.
Maybe Barry has it. You think he does?
I don't think he has it.
Okay.
Barry, do you have happier news right now?
Well, the silver lining in
He does. He
anytime
did
we
it.
talk
That
about-
Barry Ritholtz right here, founder of Ritholtz Wealth Management, host of Masters in Business. Take it away, Barry. What's the good news?
So the silver lining is whenever the economy sees a lot of these scams and frauds bubbling up especially from social media and the internet, it's usually because the economy is so strong and people have so much money that it attracts the fraudsters. I'm not saying the fraudsters disappeared in the middle of 08, 09, but you really didn't see a lot of them other than the ones who were revealed by the financial crisis, like Bernie Madoff couldn't perpetrate his fraud anymore because he couldn't make up numbers anymore. But, it's a unfortunate side effect of a lot of wealth is, why do people rob banks? Because that's where the money is.
Yeah, I was talking about someone yesterday about Bitcoin too, and just sort of going down the scale in sort of the Bitcoin products that are being offered and the crypto products that are being offered and the question marks around it as there's just so much money sloshing around. I don't know. You're going to relate this to TikTok, aren't you? Because that's part of where we're getting a lot of our news and information, right? What do you make of the whole ByteDance is now suing the U.S. government for forcing a sale of TikTok, but then you still have, say, Steve Mnuchin into TikTok in some way? What are you making of all this?
Well, let's give ByteDance credit for what they do better than either Twitter or Instagram or Facebook, which is they have created an algorithm that knows exactly how to tickle your dopamine receptors. And, once you fall down a rabbit hole of a particular type on TikTok, my wife, it's all about rescue dogs on TikTok. And it's just endlessly charming videos about dogs that have been saved. But there's a darker side, whether it's investing or day trading or taxes or go down the list. Some of the crypto scams, you can earn 20% a year back when the risk-free rate on the 10-year was 1.5%. And here's what you do. You max out your credit cards, you go buy a house, you put this money, earn 20%, you use that to pay off the house, and hey, in 7 years you own this house and it costs you nothing. Like that sort of stuff is incredibly irresponsible, and it's all over TikTok.
How so? I'm someone who admittedly is not on TikTok, but tell me what kind of posts that would come across in.
So for people who are not on TikTok, I'm not a big TikTok user. I tend to be more of a Twitter user, but one of my favorite follows on Twitter is TikTok Investors. And this is a person who is in the financial industry, but not authorized to speak on behalf of their employer, so they have to be anonymous. And they've been curating some of the most outrageous money-losing videos from the experts, from the finfluencers at TikTok. And as I wrote in a note this morning, they range from merely wrong to risky to actually criminal, where people are giving tax advice that if you follow, the IRS is going to have a little conversation and it's going to be expensive.
Well, but Barry, do you feel that as parts of the economy slow and as we go to a slowing or normalization, aka liquidity comes out of the market, do these things stop, or do you think we're just in it now?
So here's the thing that I think people kind of overlook, because we all have a tendency to see the world from our own unique perspective, and only some of us are paid to step back and look at the 30,000-foot view. There is just so much money sloshing around the U.S. economy. It's not just stocks and bonds. It's not just the $6 trillion with a T, trillion dollars that flowed into 5+% money market accounts. But you look at venture capital, you look at private equity, you look at private credit. There is just trillions upon trillions of dollars in the U.S. economy. And even as things start to slow from the massive fiscal stimulus of the pandemic era, remember, CARES Act 1 was the biggest fiscal stimulus since World War II. It was 10% of GDP. We've never seen something like that in a few generations. Then CARES Act 2, both of those under President Trump. Then CARES Act 3 under President Biden, to say nothing of the other 10-year-long sort of infrastructure, semiconductor, all the other legislation that came out, there's a lot of money out there, and it's going through the economy. And when people have been erroneously forecasting a recession, we can have a whole long, complicated discussion as to why or why not a recession hasn't happened. But it comes back to too much money, too strong of an economy for a true, persistent, and pervasive contraction to take place at this time.
Yeah, I mean, that's really the story of the economy all these days, right? That demand that just will not rein in. Last one for you quickly, Barry. We're saying in this note here on TikTok that investors should consider making some changes on various social media themselves. 30 seconds. What do you mean by that?
So you have to be very wary about claims that are just too good to be true. Turn $100 into $1 million. Hey, all you have to do is earn 2% a day. Seems kind of ridiculous. Don't pay taxes. Just be on a boat on tax day on April 15th. Utterly ridiculous. Some of the other stuff, here's why we're teaching our kids to day trade from home.
Yeah.
I mean, really? Is this good advice for anybody? So be skeptical. Anything that seems too good to be true probably is.
All right, Barry, we really appreciate it. Fun to chat. Barry Ritholtz joining us there. You can check out his Masters in Business podcast. Check that out, definitely. Someone was telling me that his 23-year-old son is like, let's talk to me about dollar yen. Like, how do I trade that? And my colleague was like, please don't do that.
Far and above where I was at 23.
Yeah. Same.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
And it is an exciting day, particularly if you like space. So Bloomberg Space is the newest editorial franchise within our far-reaching newsroom, and it's launching today. And it brings together the best reporters and editors in the game, including Lauren Crush, Bruce Einhorn, Kate Duffy, Todd Shields, and Eric Johnson, to deliver some hard-hitting enterprise scoops, documentaries, photography, and podcasts all about ... the business of space. So for more inside stories of investments beyond Earth, from satellite networks to moon landings, you can visit Bloomberg.com/space for more. And one of the stories being featured is being included in the special section of the Bloomberg Business Week magazine titled Musk and Bezos Are Racing to Bring Americans Back to the Moon. It discusses how NASA's hopes for a return to the moon depend on Elon Musk's SpaceX and Jeff Bezos' Blue Origin. Here to discuss all of this with us is Lauren Grush, Bloomberg U.S. space reporter. First of all, congrats on launching the vertical. That's no small feat. Definitely looking into that. I did a half-hour special on space once, and I loved it. It was so interesting. So thanks for doing that.
And also, just to quickly confirm, this does not mean that Bloomberg is launching anything into space. We are launching a vertical on a website about space.
It's hilarious how many people thought we might actually be sending something to space, but no.
Do people really think that? That's awesome.
Launching space content, yeah.
So let's talk about launching humans into space. If you're looking at Blue Origin or SpaceX, how is NASA taking a different approach to Blue Origin and SpaceX this time around?
Right. So NASA is very intent on sending people back to the moon for its Artemis program. Its goal is to send the first woman and the first person of color to the lunar surface. But the other main goal is to start a sustainable presence on the lunar surface, other than, as opposed to the Apollo missions, where we just kind of went, we left flags and footprints, and then we came back and we were done. And part of that is stimulating commercial companies to create hardware that NASA can use to send people to the moon. And then those companies can use that hardware to potentially turn a profit. And the big high-profile companies are, of course, Elon Musk's SpaceX and Jeff Bezos' Blue Origin, which have both been tapped to create the lunar landers that will be used to carry humans to and from the lunar surface.
Lauren, I got to ask, as one of these mere Earthlings here, why is this important to send people to the moon beyond just having the flags and the footprints? Like, what is the, real useful takeaway from having a presence on the moon?
Well, of course, there's the geopolitical one. NASA has a lot of partnerships with countries all over the world, and Artemis is definitely a global program. So it's a way for us to foster, these relationships with companies that want to send vehicles and hardware to space. And then additionally, it's kind of a proving ground. NASA is hoping to eventually send humans to Mars someday. And the idea is that by living and working on the moon, they can, come up with new technologies, new processes that they'll eventually use to send humans to the red planet.
I guess I still just wonder, though, how is that useful, besides just saying we went to space? What's there to be? I don't know. Am I missing it?
No, that is part of the use. Obviously there are concerns about China also sending people to the moon. NASA, doesn't want. There is a bit of a race in that aspect, but at the same time, there are all these kind of side benefits that come from sending people to the moon. A lot of the technologies that we use here on Earth have come from space exploration, and so by making this a goal, there are going to be all of these side benefits that trickle down to us. And then of course there's the inspirational element of it too. Seeing a woman walk on the moon will definitely inspire many young women to hopefully want to become astronauts or join the space industry someday.
Well, and for a while, no one seemed to care about space launches anymore. That was 60s and 70s, and then we stopped kind of caring. And Jeff Bezos and Elon Musk made it all really cool and sexy again. And now when we have a space launch, we take it and we talk about it and we own that. We have a vertical about it. I mean, now it's becoming something that that is inspirational again. What company do you think is going to be the first to land humans on the moon?
Well, that's a great question, and obviously something that we're going to watch over the next decade or so. As of this moment, SpaceX is technically in the front running. They're supposed to land humans on the moon as early as 2026. I think a lot of people are skeptical about that date just because of the amount of technical things that they have to overcome, the challenges they have. There's a lot of technology development they have to do. And also the deadline for their human lunar landing has changed a few times before. Blue Origin says that they're hoping to land humans as early as 2029, which may be a more realistic date. However, they are looking to land a cargo version of their vehicle on the moon as early as next year. SpaceX is also hoping to do an uncrewed landing of their hardware on the moon as early as next year. So it's anyone's game at that moment to see who can actually land something on the moon. But whoever does, if that is Blue Origin, it'll be a bit of a shot across the bow, if you will, because Blue Origin has had execution problems, whereas SpaceX is obviously quite famous for rapidly launching and iterating and moving forward with its programs.
All right. Thank you so much, Lauren. We really appreciate it. Congrats on the article. Congrats on launching the vertical. No small feat. Lauren Krush joins us, now called Space Reporter for Bloomberg. And for more inside stories of investments beyond Earth, from satellite networks to moon landing, visits bloomberg.com/space for more. So I'm taking it.
She's got a
Molly,
nice couch, by the way, in the background on YouTube. Very nice
I don't
couch.
see how the couch is relevant to space. It's not going up there.
You go to space. You go to Mars. You want a nice couch.
My couch is staying on Earth. It's getting in this apartment one way or another.
Okay, so you would not be on board for literally going to space. This is not your jam?
I mean, look, if someone's going to pay, the million or whatever dollars for my ticket, I'm sure it's more than $1 million. I'll be the beneficiary of that. But I don't know. I still do struggle to see what's the utility of going to space. Am I missing it?
Yeah,
I get the whole inspirational aspect of it, wow, this is so great, and the images of Armstrong with the flag, but why is this useful for us here on Earth besides it's cool? Has anyone answered it? Did I miss it?
I mean, I think it's learning. I think it's learning stuff.
Could you imagine the technology, how
Earth.
that's advanced, and how we can build new couches based on what we learn in space?
Actually, the last lunar landing made her couch. They built it in space. That's why it's taken so long.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern, on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.